All right, so I want to talk about something that I think a lot of people are realizing more and more, and that's that $60,000 a year, which is the median income for an individual in the United States, is not what it used to be. After expenses, benefits, and taxes, you'll be shocked at what actually goes into your bank account out of that $60,000 salary. If you told someone 20 years ago that you made 60 grand a year, they'd probably assume you were doing pretty well. Not rich, but comfortable. The bills are paid, maybe you've got a decent car, and maybe you take a vacation once in a while. But fast forward to today, and something strange happens when you actually run the numbers. You can make $60,000 a year, and it still feels tight. So in this video, I want to walk through a realistic example and actually break down where the money goes, because when you see the math step by step, it starts to make a lot more sense why so many people feel financial pressure right now. So let's just start with $60,000. It sounds really good on paper, but the first thing people forget is that $60,000 is your gross income. That's before taxes, before deductions, before benefits, before anything else gets taken out. So the first thing that happens is taxes. You've got federal income tax, Social Security, Medicare, and depending on where you live, state taxes, and sometimes even city taxes. Let's assume a fairly typical scenario here. Someone making $60,000 a year, single, standard deduction, normal withholding. After federal tax, Social Security, Medicare, and state or city taxes, that $60,000 usually turns into somewhere around $45,000 take home for the year. Now divide that by 12 months. That's about $3,750 per month actually hitting your bank account. Already, that $60,000 salary looks a lot smaller. But we're not done because a lot of people also have benefits taken out of their paycheck before they even see that money. Health insurance is a big one. Due to most Americans choosing the high deductible plan from their employer, most people pay somewhere between $400 and $600 per month for health insurance. Now, for this example, let's just use the middle figure of $500 per month. That $3,750 per month turns into $3,250 per month, but a lot of financially responsible people also do something else. They contribute to a retirement plan. Maybe it's a 401k, maybe it's a Roth IRA, maybe they even put money into an HSA. Let's just say someone contributes a small amount to the retirement plan, like 2% of their salary. 2% of $60,000 is about $1,200 per year. That's another $100 per month. Now we're sitting around $3,150 per month. And if they're funding an HSA as well, maybe they're putting away another $300 to $350 a month. Let's just say, for this example, $330. Now, that $3,150 turns into about $2,800 per month. So before we've even started paying normal life expenses, the money that actually hits the checking account is already down to about $2,800 per month. So let's just talk about housing now. Housing is usually the biggest expense for most people. In a lot of cities today, rent alone can easily run between $1,200 to $2,000 per month for a single bedroom apartment. But let's just say someone got lucky and bought a house earlier or lives in a lower cost area. Maybe their mortgage is about $450 per month, and that is extremely rare now unless you bought a house around 5 or 6 years ago. So let's take that $450 and subtract it from our balance of $2,820. We're now sitting at $2,370 per month, which still sounds manageable, but we still have to take into account other expenses. So for transportation expenses, a lot of people have a car payment. The average car payment in the US right now is actually over $700 a month for new vehicles. But let's say someone's being responsible and is paying $350 a month for their car. Now we're sitting at just above $2,000 per month. But let's say car insurance is $120 and gas for commuting could be $150 per month. Now we're down to $1,750. Now you have to take into account the price of food. Groceries have gone up a lot over the past few years, and for a single person, it's not unusual to spend $400 to $500 a month depending on where you shop. So let's just say you spend $450 a month for food. We're now sitting at $1,300 left. Now we start adding normal household bills, utilities like electricity, water, trash, and heating. That may run $200 a month. Now we're sitting at $1,100. Phone bill might be $80, internet might be another 70. Now we're sitting at $950. And here's the part that surprises a lot of people. You make $60,000 a year. You're doing everything right. You're working full time. You're paying your bills. You're saving a little bit for retirement. And after basic living expenses, you're left with around $900 of breathing room. Now, that might sound like a lot at first, but life doesn't operate on perfect spreadsheets. Cars break, roofs leak, medical bills pop up, insurance premiums go up, property taxes increase, your dog needs surgery. Suddenly, that $900 cushion can disappear instantly. And that's why $60,000 doesn't feel the same as it used to. It's not just inflation, it's the explosion of fixed costs. Housing, healthcare, insurance, food, all those costs went up, but wages didn't grow at the same pace. So what used to feel like a comfortable middle class salary now feels more like a starting line. You can absolutely live on $60,000, but thriving on 60,000, that's where it gets harder. Thriving means building real savings, investing consistently, handling emergencies without stress, taking time off without worrying about money, and that requires margin. Margin is the most important concept in personal finance. Not fancy cars, not flexing online, margin. Margin is the space between your income and your expenses, and when that space gets too small, even a decent salary can start to feel really tight. That's why a jump from $60,000 to $75,000 can feel huge. Not because it suddenly makes someone rich, but because it creates breathing room. An extra $1,000 a month in a margin can completely change how life feels financially. So if you're making around $60,000 a year and you've wondered why it still feels a little tight sometimes, you're not crazy. You're just experiencing the reality of modern cost living math. And more people are starting to notice that. But I'm curious. If you're in the $50,000 to $70,000 range right now, does it feel comfortable to you, or does it still feel like you're constantly just keeping up with expenses? Let me know in the comments below.